MACOM is scheduled to do a $100 million offering, but is the market ready for another semiconductor company? Francis, when we look at this company, they took a little bit of a hit from that Thailand flooding, but you said even with the Thailand flooding, you weren't really thrilled with this company.
Well, not really, because as you know, we always look at sequential quarterly growth just to get an idea of how they're growing in the market. This one, their sales have been relatively flat around the $78-77 million mark for about the last 4 or 5 quarters. Their income has been flat. They want to come at 31 times earnings for the trailing 12 months. They mentioned competition Hittite in their filing, and that one is selling at 20 times earnings. So they want a premium over what the company they named is the only company that competes with them in all 3 markets. Flat sales, flat earnings. It's not worth 31 times earnings.
All right, so as lackluster as that company's performance has been, you actually like the next company that's going public, Demandware, and it's in that hot cloud space. And what it does is provide software that helps companies set up e-commerce sites. So you were looking at this and you kind of liked it.
Well, I like it in the sense that I think it'll go up on the offering. Nowadays, if anything's cloud-based, it goes up on the offering, surprisingly, in further increases in the aftermarket. Yes, what they do is they supply websites for e-commerce. That's a growing area. They get a % revenue from their customers. If you look at the last 6 quarters, they've been profitable only 2 of the last 6 quarters, and going into the IPO, they earned $2.6 million, which is good. And if you analyze that, that's 37 times earnings. But when a company shows such a big increase going into the IPO, you wonder whether it's managed, whether it's managed the contract, or what's happened. But in this company, 75% of their revenue is recurring subscription revenue and recurring from their participation with their clients. So it has a good visible top-line revenue stream. They need to kind of earn money on a consistent basis. If they earn anywhere near what they did in the December quarter for the next couple of quarters, the stock will really do well. So I think on the offering it'll go up, and it may be one of these cloud companies that the investors want to hold for for a couple of months and get some increase. But if they come in with a bad March quarter, who knows? Then the stock won't do quite as well.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're getting